Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Tarsus Pharmaceuticals. Let's just say, after this video, you might see eye care in a whole new light because we're going to unpack some details that could have you blinking in surprise. Tarsus Pharmaceuticals just released their yearly report and we're going to break it down in plain English. Think of it like getting an eye exam for the business world. We're checking everything from their sales numbers to their future plans. Are they seeing clearly, or is their vision a little blurry? Let's find out. First off, this isn't just any document. It's a Form 8K which companies file with the Securities and Exchange Commission, or SEC, when big things happen, things that investors should know about right away. Consider it an alert system for company news. This report is dated February 25, 2025. That means we're getting a snapshot of what Tarsus has been up to and a peek at what they're planning. Tarsus Pharmaceuticals, based in Irvine, California, is the company we're focusing on. They are in the business of eye care. Now let's dive into the real meat of the report, the financial results. The company issued a press release about its financial results for the year that concluded in December 2024. It's important to remember that this information is furnished, not filed, which means it's provided as information, but isn't held to the same legal standard as filed documents. Let's take a look at the press release itself. Okay, now let's look at some actual numbers and what those numbers actually mean. First up, cash. As of December 31, 2024, Tarsus reported having about $117.7 million in cash equivalents, and marketable securities. This is how much liquid assets they have available. Think of it like the company's checking account. Having a good amount of cash on hand gives them flexibility to invest in new projects, pay off debts, or handle unexpected expenses. Now, for the not-so-great news, they reported a net loss of about $134.1 million for the year ended December 31, 2024. In simple terms, they spent more money than they made. This loss is actually bigger than the one from the previous year, 2023, when they lost about $107.2 million. Losses aren't good, but they're not the end of the world, especially for companies in the drug development world. Why such a big loss? Well, a big reason is research and development. They spent about $77.3 million on R&D in 2024. This is up from $64.3 million in 2023. Developing new drugs and getting them approved is extremely expensive. These expenses will hopefully pay off in the future if the drugs are approved and sold successfully. But that is far from a guarantee. They also spent a good chunk of money on selling, general, and administrative expenses, about $73.6 million in 2024. These are the costs of running the business, including marketing, salaries, and other overhead expenses. So what's the big picture here? Tarsus has a good amount of cash, but they're burning through it as they invest in research and get ready to sell their products. They are losing more than before, so they will need their product to succeed in the market. Now let's zoom out and put Tarsus Pharmaceuticals into context. They are in a competitive market with other eye care companies. Some big names you might know are companies like Novartis, Johnson & Johnson, and Bausch Health. Tarsus is much smaller than these giants. They're trying to carve out a niche with innovative treatments, but they face tough competition. So what's my take on Tarsus Pharmaceuticals? They're in a high-risk, high-reward game. They have a decent amount of cash, which is good, but they're losing money quickly, which is not so good. Their success hinges on their ability to get new drugs approved and sell them effectively. One of the biggest risks they face is competition. The eye care market is crowded, and they're up against much bigger companies with deeper pockets. They also face the risk that their drugs won't be approved by regulators or that doctors and patients won't adopt them. If their key product doesn't sell well, they could be in trouble. On the other hand, they have a real opportunity to disrupt the market with innovative treatments. If they can successfully commercialize their products, they could generate significant revenue and become a major player in the eye care industry. It's a bit of a gamble, but the potential payoff is huge. In conclusion, Tarsus Pharmaceuticals is a company with potential, but it's not without risks. Investors should carefully consider the company's financial situation, competitive landscape, and regulatory hurdles before making a decision. It's definitely a company to watch, but it's not for the faint of heart. Thanks for watching. If you found this video helpful, please like, comment, and subscribe for more Corporate Decoder videos.